Hello, investor and trader. Welcome back to another episode. So, in this episode, it's going to be about swing trading for small account, particularly under 25,000, also known as the PDT rule, the pattern day trade rule. So, this video could benefit you. Well, I did make some trades today, but then these are a bunch of sell orders. As you can see, there's no buy orders. The reason is I bought these stocks yesterday and I held it overnight. That consider swing trading. If you buy a stock on that day and you sell it on that day, that's considered day trading. But except for THO, I bought THO a couple weeks ago when I was in Yosemite, so that's still considered swing trading, right? So here, it's pretty much a video follow up with this video that I made back in April 6th about swing trading and how I said it is over 90% success rate. We will see because it's been 3 months already, and I made this post publicly on my Instagram back in November 13 when this account was around $11,007. So this account today it is at 23,000. Let me refresh that to make sure that this is the real account. It's not a paper account. Okay, so let's go back to November. What day was that? November 3rd, I think. November 13. Okay, so November 13. There we go. 11,007. So right now is at 23. So another question is, how did I do it? Did I follow this principle here? Yes, I did. In fact, I'm going to go a little bit more detail to show you guys how I do it with these criteria that I just summarized what I did. And I want to share with you guys. So this is going to be the title, How to Build an Account from 0 to 25,000. Now these are my criteria. You can follow along if you like. Hopefully it helps. It's not a guarantee, but at least it helps, right? Because I'm going to show you guys how I do it. So the first thing I need to do is deposit money into your account. Learn how to pay yourself first. So again, let's just go here and let's go to this account. Now we're going to go to performance because this is where it tells you all the, how much I put in and stuff like that. Now we go to details. It's right there, deposit. It means zoom in so you can see. Not too much. How about that? Okay. So like I said, this account start September 2020. I put in 5 and so on and so on. Every month I try to pay myself first. That's the first step because when you have a small account, you want to grow it. The more money you put in, the quicker you get to 25,000. It is pretty common sense. Now these are my numbers. You don't have to do these numbers. You can do $500, $50, $50,000. It doesn't matter what the number is. What matters is the habit of doing it. So that's the first step. Pay some attention to the overall market, the Dow Jones, the SPY, and the NASDAQ, especially the RSI, the EMA, and the stochastic. So what I mean by that is this. I'll give you guys an example. So the SPY. Okay. The stochastic right here. RSI right here. And the moving averages. That's pay attention to that because that's the direction of the overall market. And I explain why later. Develop a swing trade criteria. Now, everybody gonna have different criteria for themselves. These are my criteria I want to share with you guys. If it helps, it helps. If it doesn't, I'm sorry. Next step, have patience. Remember, these are swing trade. You want to give it time. It's not like buy a stock today and gain 25% the next day. That's not gonna happen, especially with these Dow stock and these Nasdaq or these SPY. Unless you play with penny stocks, sure, but I don't really trade penny stocks. Consistency is the key. Again, I can't emphasize that enough. Is it this one right here? Show you guys what is consistency looks like. This is the consistency that I'm talking about. Since the account has been created, this account I have locked in $7,300. So let's take out a handy dandy calculator and find out what is the percent return on that so far on this account. So this is how much profit I locked in already. Divide. How much did I put in? How much did I put in total? 17,500. So it's 42%. That's pretty decent. I mean, I'm happy with it. It's not the best percent return, but it's not the worst, right? 42%. Hey, I'll take that any day. Imagine this account is $1,000,000. Oh, congratulations, you just made 400K, just like that. So 42% is pretty sweet. We still have another half a year to go. Okay, so let's go to the next one. Consistency again is the key to success. You have to be so okay. All right. Here are the criteria. I avoid IPO. I cannot emphasize that enough. I do not trade IPO. I trade like a chicken. I told you. Even swing trade, I trade like a chicken. And I avoid hype stock and parabolic. Well, sometimes I throw it in there for fun, but on this account right here, I don't trade those stocks. It's just too much risk. So what are those stocks looks like? So here, let me give you an example, okay? And you probably know some of these. Coin. Recently IPO, they're not, well, it's not really recent. It's not IPO, but there's a term for it, but I forgot. But still, it's still new to the market. That's what happened. That is why this stock went from 400 all the way down to 200 ish. If you buy it up here in the day IPO, you are not happy. Oh man, can you imagine your $400,000 now turns to $200,000 ish? That's like almost 50% drop. That's not good. Another example is DUN, just recently IPO, Krispy Kreme. Same thing, a lot of hype on this stock, but I don't care. I don't care how high it go or how low it go. I avoid. Remember, I want my success rate to be very high. Oh, in fact, let me do this real quick. I forgot to do this. So I think it was this one, right? Yeah, I said right here 90%, right? Close to 90% right here. So let's just check real quick. Wait, I made this video back in April. Okay, so let's go to April real quick. Until now. How many red days do I have and how many green days do I have? Okay, let's do here. Let's count how many days there are so far. Again, this is swing trade. It's not every single day. You can see it right here, right? The here it means no trades. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25 days. How many red days are there? Well, here's 2 right here. The big ass red day, but still is red day. And here's a tiny red day. So that's 3 red days. Let's take the candy dandy calculator again. So there's 25 days minus 3, that's 22. So 22 divided by 25. What percentage is that? 88% green. Hey, that's still pretty good, right? Close to 90. Not over 90, but close enough, right? You get the idea. It's still in the high 80s and high, oh, maybe low 90s. It's not 100% for sure. Okay. Consistency. That's what I'm trying to say right here. I avoid penny stocks. I trade them, but I don't really trade them on this account, because I want to stay consistent, right? Okay. Avoid stocks that are far away from the 50 EMA with daily RSI and stochastic above 60. Now, what are those? What I mean by that is this. So let's just go to THO, for instance, because I recently traded that. So we go to the daily, and let's go to 6 months. See how right here, it's far away from the 50 EMA. My 50 EMA is the green line right here. You can see the word 50 EMA right here. Right? It's far away. See the stock price is very far away. On top of that, look at the RSI. It's in the 78 right here. Right? In the 70s. Look at the stochastic. It's in the 90s. What did I say right here? Avoid stocks that are far away from the 50 and or with the daily above 60. So therefore, right here, I'm not gonna buy it. I don't care how high this thing go. I just don't do it because, like I said, I trade like a chicken. There's no way I'm gonna buy it. I'm glad I didn't because these are bag holders right now. They still hold on to it because remember when someone sell the stock right here, because I call it sell off, someone is buying this stock on the way down. Someone is holding the stock still to this day, and hopefully one day it'll go up above 150 so they could get out. That's known as a double top or a triple top. Now that's not a topic, but you get the idea, right? Next step, trade stocks that are in the S&P and the Dow and the Nasdaq. Again, just avoid penny stock. It's just too much risk for beginners. Patience and consistency again. Okay, so these are some of the criteria in detail. So let's get started. Look at the 5 years chart on the daily candles. Okay, look at the 5 years. Is it an uptrend or is it a downtrend or is it a sideways? That question you have to know yourself. I prefer going up, not down. So a famous one I like to use is Visa. Look at the 5 years, it's a solid uptrend. Or another famous one is Amazon. Right? It's all going up. Okay. So I prefer up because I'm going up, right? Buy low, sell high. And then next is look at the key level of support. The 50, 150, 100, 150, and 200 EMA, so on and so on. Okay, so that's why these moving averages are there. Let me zoom in a little bit so it's easier to see. Let me just go Visa. It's a much more clear chart to see, but you get an idea. So these moving averages right here that I use and always use, 50, 100, 150, and 200. These are color code right here. It tells you. You can pause the video and see it for yourself. These two right here are the momentum moving averages. These are the 6 and the 18 or the 20. Sometimes I use the 5 and the 6. I believe I talked in my previous video, but still, these two are momentum and these are the core moving average. I call these terminology. But people call these momentum, and they just call it, they as in the Wall Street people just call it moving averages. I call them the core moving averages because everybody would be watching these right here, especially the institutional traders and investors. Talk about the big guys, the guy with $1 billion plus. C. Correct position sizing. Initial entry should always be small, about 2 to 6% of your total account value. No one can time the market, even professional traders. What I mean by that is, let's say you want to buy Visa, right? If you really want to buy Visa at this price right now, as I'm recording this video at $235, please buy it small, right? Don't buy a huge position. Let's say your account is 10,000. Don't go in all 10,000, or don't go in 5,000, like 50% of your account. Because look at the RSI and stochastic right now. It's not below 30. It's above 60. And I said that my criteria, do not buy at that, that fit the criteria to get this 90% or 80% plus success rate, because you're buying at the peak, kind of, right? So buy it small. And I give you an example what I mean by that here. THO. So let's go to transaction and you can see it. So THO for the past 30 days. Okay. Let me zoom in so you can clearly see what I'm talking about. June 10th, I bought some shares, right? I bought 30 shares at 117. So let's go June 10. June 10 is somewhere right here on this candle. Again, see? Stochastic is low. Sorry, RSI is low. Stochastic is low. Check. Moving average 200? Check. So on my first entry price, I bought 30 shares. Next thing I know, the stock went down. Great, let it fall. I don't care. And finally it did. So I'm down like 8, 9% or 10%, and I decided to buy some more. I'll buy on the 24th, right here, at 107. So where is that at? 24th. Right there. So I bought some here and I bought some here. But guess what? I'm green now, right? That's why I sold it today. And I made like $200-ish, almost 200 on that trade. So I went from a losing trade to a winning trade because I averaged my calls down, and when I entered, I did not enter all in, right? Remember, this account is around 23,000, right? You see the entry price is at 3,500. Now, this account is also a margin account, so that's double my buying power. So in theory, I have around 50,000. So 6,000, 4,000 is not huge position, if that makes any sense. By the way, I don't go all in margin either. That's just way too much. That's another topic, but you get the idea, right? So correct position sizing is very important. Let me minimize that. Okay, next step. Consider add to your positions. I just talked about that when you're down 15% or key level. So that's checked already. That's how you average your cost down. E. Repeat step D until you build your full position. Normally, you do not want to exceed more than 20% of your total account value. So Again, if you have a $10,000 account, you want only $2,000 max position, full size. You do not want to go more than that. If you do go more than that, again, this is for swing trading, okay, not investing. If you do go more than that, you're going to depend on that stock to go up, and you don't want to put yourself in that situation. It's going to be pretty bad, you know. Just like example, let's say you don't know, you buy some here, this moving average, then you buy some here, then you buy some here, then you buy some here. All right, then you're out of buying power. Guess what happened? You're stuck because your average cost is going to be somewhere down here. Meanwhile, the stock is still here. You see what I'm trying to say? So average your cost wisely. In other words, don't go in. Don't average your cost too much, especially if the stock keep on falling. And that's the next step right here. If you are already in 20% of your account and the stock continue to fall, you can do two things. Either cut your loss, learn from it, what you did wrong. You probably entered too early or average cost too soon. Then you have to cut your loss or become a bag holder. I did both of these before on this small account. It's just up to the trader, but if you follow these rules, you should be fine because I follow these rules and my account is doing pretty well. Okay, G. Now these are profit taking. So consider taking profits or lock in profits 1 to 2 risk ratio. Or if you reach your dollar amount, let's say you want to make $100 per trade, you reach it, just take it. Or you want to make like 5% gain and you hit it, just take it. Because bears and bulls make money in the market. Oops, spell market wrong. But pig gets slaughtered. Let me spell that. What that means is if you're greedy and you don't want to take profit, like right here, stock going up, going up, going up, going up. Let's say you buy it down here, you buy some here, and you buy some here, and the stock going up, and you don't want to take profit. You think you go higher. Next thing the stock pull back. You probably like, damn, that sucks because that happened to a lot of traders. That's it's kind of like losing in a way, and it's not a very good feeling for your psychology mindset. So lock in profit when you reach your price target or the number of dollars you want to make or the number of percent you want to make. Or consider take some profits or lock in profit when the daily RSI and stochastic is above 70. Same thing right here, right? See that right there? This is where you want to take profit. You don't want to buy here. You want to short or something. Well, no, shorting is another topic, but this right here is where you want to take profits. This down here is where you want to buy, just like right here. See, stochastic is low. This is right here is where you want to sell. This right here, see, is where you want to sell. This right here, it's kind of here. You kind of consider taking profit, and that's what I did. I sold some right here because all these right here become resistance, and that's the next topic right here. Consider take some profits at or lock in near key level of resistance. Again, it's the same psychology. I bought some here. I bought some here. My average cost is somewhere right here. Right now, I'm already profiting, and I see all these heavy resistance approaching. Stochastic is getting high. I'm taking my profits. Profit is profit. Don't be greedy. Don't wait for this to go up here. I don't know how long it will take for this to go back to 150. Okay. Step 4. So these are some key skills to have to increase your chance of success rate. Remember, this is not 100% success rate, but you can increase it by several percent if you understand candlestick formation. And I repeat again, do not buy books or join courses or anything like that. All these information are free online, guys. Just type in candlestick formation and just study it, learn it. Understand some basic patterns. Same thing. These are channel, wedges, bull flag, head and shoulder, so on and so on. There's so many different patterns. Just type this keyword right here, basic chart pattern for candlesticks, and a bunch of stuff will pop up on Google. Just look at it and try to memorize some of that because it will help you with your trading decision. The more you put into learning, the more you get better at it. It is common sense. Malcolm Gladwell did said, to master your craft, you need to put in at least 10,000 hours. That's like 5-year experience, but you get the idea, right? Build a watch list. I use Stock Tracker app, the free version. It looks like this. So I screenshot it. It's an app on your phone. That's how I keep track of my stocks because there are so many stocks. I don't have time to go one by one. Now you can see I watch a lot of stocks, over 200 stocks. Now I don't know every single 200. No. Sometimes I found a good stock. I just put it in this category, right? And I watch it over time just to monitor it. When a stock is like this right here, it's too high, I'm not going to buy, but I would wait, just give it time, eventually fall back, and so on and so on. So create a watch list. Everybody's watch list will be different. So Learn how to create your own watch list and just watch the stock over time on a daily basis. Remember, this is a swing trade, and you get an idea what the stock is doing. So that's very important. Okay. D. Oh, sorry, we're in the D area. 5. Ultimately, be self-sufficient. Do not follow people's alert. Do your own research fundamentally and technical analysis. That's very important because when other traders trade that whatever stock they trade about on YouTube, like like top 10 stock to buy or top 5 to buy, whatever they're buying, that's their analysis, not your analysis. Best of all, do your own analysis. Now, this will take time. It's not overnight, but ultimately, you need to do your own research because, hey, in the end of the day, that's your account, right? Nobody cares about you. 6. You do not need to trade every day. Wait for the best setup. Have patience. Again, when I bought this stock right here, right? I didn't buy it right here, or right here, or right here, right? I bought it right here because I wait for that little bounce. I need to make sure that things start curving up. So that's why I decided to buy it right here. I need to wait for the perfect, not the perfect, but the best setup as I can see. Because like I said, you don't want to average cost your way down too soon, or else you're gonna out of buying power or be pretty bad position. You don't want that. Swing trading is a process. It takes time to grow your account. It is a journey, not a sprint. As you can see right here, it took me a while to get, to 23. It's not overnight. You can see, right? Since the September, around, you see right here, from 0 to right now, it's still not over PDT yet. It's at 23, but it's getting there. It's been almost a year already, but slowly it'll get there. Just a couple more $1,000 to go. Always have at least 20% or more in cash. You want to be ready when opportunity presents itself. In other words, do not spend all your buying power. That's why it's so important to deposit money into your account every single month or every 2 weeks. Pay yourself first. That way, when the stock goes down, you will be ready. You will be ready for that to happen because the stock's not gonna wait for you. It's gonna bounce without you, you like it or not. So when that happens, RSI is low, stochastic is low, buy some right here, you be profiting. As simple as that. Do not afraid to take losses. A lot of people are afraid of that. I don't know why. It is part of the game. Learn how to lose. You're not gonna win all the time. As long as you win more than you lose, eventually you beat the market. Eventually, I don't know when, but eventually, right? Because it's a learning process. It takes time to win the high success rate. I would say a successful trader, as long as you win more than you lose, like 60% of the time, you still can make a lot of money even though your win rate is 60% of the time. As long as you stick to the 1 to 2 ratio, even your win rate is 60%, you still very, very profitable. Okay, I hope this video helps how to build this small account. Um, Maybe I'm thinking next month or next 2 months, this account right here should be over 25K. That'd be very cool. Now, am I gonna day trade this account once it 25K? Probably not. I'm gonna swing trade. I like these swing trade. I feel safe, I don't buy heavy because when you day trade, you have to buy quite heavy just to make that 50 cents or $1, $2 move. But when you swing trade, you can more relax. Just don't go crazy with it. Okay, this video is getting long. I hope that helps. See you guys in the next video.